than just being paid to a zero balance.
Wow.
That's significant. It is significant. Because again, if that collection was older, it may not be impacting your FICO score very much, but when you pay it off, now you've changed the dates on that collection and brought it current. So I try to have that consumer reach out to that collection agency and see if they'd be willing to provide them with the letter of deletion. A lot of collection agencies will. A lot of the time, if you ask for a letter of deletion, that may require that you pay that collection in full. But if you've paid it in full, reach back out and just say, I paid this in full. I didn't settle for less than the full balance. Would you be willing to give me a letter of deletion?
Mm-hmm.
That's what we love to see happen. The more drug or negative information that can be removed from your credit report, the better your FICO score is going to be. But again, when I look at credit reports, I focus on what's reporting the last 24 months. That is it. Anything outside of 24 months, I typically don't touch it. I leave it alone.
Got it. So explain to the consumers a little bit about what you do to kind of bridge the gap between credit and getting them prepared and all of those things.
Well, I look at the overall credit. Every credit report is a DNA of its own. So you can't take two credit reports, even two people that have been married for a long period of time. Mm-hmm. You look at those two credit reports, I guarantee you're likely going to have very different credit scores. You may have one bureau that has the same credit score, but it may not be that in a week. So I really just have to look at each consumer, what's reporting, what's impacting their FICO score. When we look at a mortgage credit report, there are, underneath the score, there are 4 or 5 factors, and they're just a list of items that tell me why that borrower has that credit score. Mm-hmm. They're negative items. But I've studied this stuff for so long, I know what those factors, what's being factored into those factors. So that's what I focus on.
Gotcha.
For example, if one of the factors is, it tells me that the client has, credit card balances and they're high or too high, then that may be what I focus on. So we may have to pay down credit card balances, but I can tell you this. A lot of times that's not the case. A lot of times I can find a small collection, a collection. Now, in the mortgage world, for the most part, mortgage lenders don't really focus on medical collections.
Okay.
You can have medical collections up to typically a certain amount, and they can leave those balances there. But if it's a medical collection that's $100 that was just reported on your credit report 6 months ago, we can maybe get that deleted versus paying down or paying off, $2,000 worth of credit card debt. Then I'm obviously going to make the recommendation to try to get the medical collection deleted, because if we get that medical collection deleted, it could actually give us more score improvement than paying it down or off $2,000 with credit card debt. So that's what my job is. And to be honest with you, I've been studying this stuff for so long that it's just second nature to me.
You know it like the back of your hand.
It's just like driving a car, or I don't even think about it. But try to focus on. I understand. I used to originate. I used to be a loan officer, so I understand that buyers a lot of times don't have a lot of money to pay off a lot of debt or pay down a lot of debt. So I would rather focus on things that are going to really drive those FICO scores, up. Little money as possible out of pocket than to pay off a whole bunch of credit card debt when it may not be necessary.
Yes, and that's awesome that you are an expert in that field, and that's why I felt it's so important.
I was so fascinated. When I originated, when I was a loan officer, I really didn't understand any of that. None of it. If the score wasn't there, I really didn't have a credit partner to be able to reach out to and say, what can this buyer do? I didn't have that at my fingertips all those years ago. Today, that's what I do. So I have a lot of respect for loan officers. I have a lot of respect for realtors, and you guys are, out there. Your ultimate goal is to help buyers achieve home ownership. I mean, that's their dream.
Mm-hmm.
I help more so in this part of the business. Just because I've studied it and I love it.
Yes.
Saw that in the class.
I
did.
So
about it. The other thing is I understand too that if you Google credit or credit scores,
mm-hmm.
we know how many websites pop up, how much information pops up. It's so confusing.
It is.
So I really try to educate, I really try to educate, loan officers. I really try to educate realtors as much as I can so that you guys can help your buyers. So that they're not so panicked, because it can be stressful.
Mm-hmm.
I think for first-time home buyers, I think credit is the number one reason, or can be the number one reason why they not move forward.
Yes.
Because they feel like they have bad credit, and they really know where to go, what direction to go, what should I be paying, what should I leave alone.
That's right.
Yeah, so that's why I really try to help and cut through all of the red tape and provide the facts. So.
And that is awesome. And with that being said, one of the things that they also need to know is about impact. And so, what things impact, my score or my credit? Like, one of them is bankruptcy. Like, how does that impact credit?
So you have a lot of things that impact a mortgage credit score, and I focus on the mortgage credit score simply because that's what I've studied for so long. There are a lot of things that impact a mortgage credit score, and I'll kind of go through a little bit of a list, and then we can talk about it. But first and foremost, believe it or not, late pays. Late pays impact your FICO score the most. Largest part of your FICO score. So, for example, if you have a car payment that was due, the 1st of November, if you didn't pay it, by the 30th of November, or let's just say you paid it in December, the creditor would likely report you 30 days late. Those late pays are tough because there are creditors that, if you bring that account current, and that is always my first recommendation, if you're late on something, bring it current. That's the first thing we have to do, bring all delinquent accounts current. But if you can reach back out to that creditor, talk to a supervisor, see if they'd be willing to give you a one-time courtesy late date removal.
Okay.
I can tell you any of the late pays that are reporting on your credit report that are recent, I initially try to focus on the last 12 months. Because any of those late pays that we can get removed is certainly going to help, especially if the account only has one late pay on that account. So if you paid your auto loan for 3 years and you have late pay, just one late pay 3 months ago, if we can get that late date removed, your FICO score is going to increase. So that's the biggest negative impact on a FICO score. Credit card balances.
Okay.
So when it comes to credit cards, consumers are, I hear it in the industry that consumers think credit cards are negative. That is not the case. Believe it or not, every consumer needs at least one credit card, and specifically one major credit card.
Yes.
MasterCard, Discover. When it comes to a mortgage credit score, there is a factor that shows up underneath your score if you do not have a major credit card reporting, and it's a negative factor. So that's actually one of the first things that I look at when I look at a credit report. Does this consumer have an open major credit card? If not, it's going to be my very first recommendation. Have them apply for a small credit card. The credit score isn't great. You've got some creditors out there like Credit One Bank, First Premier Bank, that do report to all three bureaus, that this is what they have these credit cards for. They help consumers to establish or reestablish credit. So that is actually my first recommendation. If you do have credit cards, there's a couple of things here. FICO looks at how many credit cards you have with balances. If you have 10 credit cards with balances, then the first focus is to try to pay off as many of those credit cards as possible. You want 2 or 3 of them with some balances, but you want to try to minimize that overall risk. Okay? So we want to start paying off some of those balances. Leave the accounts open. Don't close credit cards. Believe it or not, when it comes to history, it has a significant impact when it comes to history in your credit report. Closing out credit cards can really negatively impact your FICO scores. So we just want to pay them off, leave them open, and focus on the ones that are left. So if you have 3 left that have significant balances, we want to try to pay down those balances to my beautiful number. If you really want to have a nice FICO score, is 20% of the credit limit. Each card's credit limit. Buyers, most consumers think, okay, I have overall $20,000 worth of available credit limits, right? Overall $20,000 of available credit limit. They think that if they can keep their balance at, I've heard the number 40%, less than 30% of overall credit limit, then they're in good shape. It doesn't work like that when it comes to mortgage FICO scores. If we have 3 credit cards left, FICO looks at each credit card, so the credit limit versus the balance, and it is per card. It is not overall. So if you have 3 credit cards, they each have $1,000 credit limit. The overall goal is to pay down each credret card to roughly $200. Okay.
Wow.
Yeah. So you have to really. That's the best way to make sure that your FICO score, when it comes to credit cards, are in good shape. Okay.
To make sure.
You mentioned bankruptcy. So there was some, obviously some struggles in 2008, 9, 10. I mean, consumers went through some significant struggles, and I see bankruptcies on credit reports all the time. A bankruptcy is a public record.
Okay.
Consumers think that a bankruptcy, if they still have a bankruptcy showing up on their credit report, it can keep them from purchasing a home. That is not the case. Absolutely not the case. They would need to reach out to a loan officer to determine, what loan program based on their score they would fit. And then that loan program determines how far outside of the bankruptcy charge time frame that you have to be in order to purchase a home. But for the most part, that public record, that bankruptcy public record, can be on your credit report for 7 to 10 years, depending what type of a bankruptcy it is. So if it was a Chapter 7, a Chapter 7 is where, typically it's discharged within about 3 months and all of your debts, are basically, wiped clean. That bankruptcy public record stays on your credit report for 10 years. If it's a Chapter 13, where you have a payout, a lot of times it's a 5-year payout, that bankruptcy public record would remain on your credit report for 7 years, and it's from the file date, not the discharge date. So you filed that bankruptcy, the clock starts ticking with how long that public record can remain on your credit report. A lot of people think it's a discharge date. It is not. It's based on the file date.
The file date, guys.
Yep. So just because you filed bankruptcy, it does not mean that you cannot purchase a home. You just need to, the buyer would really need to have a conversation with a loan officer and let them take a look at the credit based on the score, the file date of the bankruptcy, discharge date. They'll tell them when they're eligible to purchase again. Okay,
and a lot of them are nervous because they basically hear, I got a bankruptcy, I'm not going to be able to purchase, but, I tell them all the time that is far from the truth. And I always encourage them, to speak with the lender, allow them to, because a lot of them are even nervous about letting them pull, just go ahead and fill out the loan application so that they can pull everything. And so that way, like the lenders that I work with, they will send it over to you. and then you all can kind of devise a plan on how to get them ready. And that's one of the things that I encourage. Like, even if you have the inkling of, I want to purchase a home, allow us to help you. That's the purpose of me bringing everybody, Lisa, on my live, because one of the things, especially coming into the new year, people are saying, you know, my goal is to be a homeowner. Allow us to help you. I promise you, if you just stick with us and follow the process, that we will definitely be able to help you guys, because things like bankruptcy, even repossessions, can you talk about how even that may impact?
To be honest with you, if it's a repo of a car, believe it or not, I rarely have to make any recommendation on that. And I'm not, it's a loan officer question depending on the loan program, but a lot of times if a repossession is 12 months, 24 months old, a lot of times they can just leave. There's typically a balance, let's just say the balance is $5,000. A lot of times they can leave that balance alone. And that's something that a loan officer would need to look at. Just because you had a repo does not mean you cannot buy a house. And a lot of times, you can purchase a home much faster after a repo than you can after a bankruptcy.
Wow.
And not have to settle that balance. So that's actually one of my number one questions. If I get, if I have a credit report that I'm looking at, it's one of my first questions for an LO. If I'm looking to improve the FICO scores. My question to the loan officer would be, can we leave this balance alone for this repossession? Do you have to pay it off? Does it have to be settled? Many times they say, no, we can leave it because it's aged out enough. So
wow.
Now people, this is the reason I love talking about this stuff, because buyers just, they struggle over their credit, and it is I really feel like it's one of the reasons they just do not put one foot in front of the other and move forward.
It is, Lisa.
They wouldn't believe that they could actually purchase a home. Here's the other thing I like to do. If we have a credit report and maybe we need a little bit of time, I'm really good about providing that time frame. Here's some direction, so providing some recommendations, and if the client can get these things done, one of the other things that I understand when it comes to credit is essence of time.
Right.
Time. If you're paying bills on time and no late pays, no derogatory, believe it or not, your FICO score can improve pretty significantly as long as you've put some things in place, like you have a major credit card that you're paying on well. That really helps to improve your FICO score pretty significantly. I like to provide a time frame if we can't, if the person's not in a position to purchase a home now based on the credit score that's needed, the FICO score that's needed, then I'll provide a time frame. Let's revisit the credit in 3 months. People think 12 months. I can tell you, if they follow the right plan, pay their bills on time, no late pays, even if their credit card balances are high at some point, if we need to pay those down, we can. But it's the things that really, it's up to a creditor whether or not they're going to remove it, like a late pay. So make sure you bill within that 30-day time frame. Make sure we have a credit card, a major credit card, and you're managing that account well. Those types of things.
Right. So with the late pays, how long are they staying on the report?
The late pays?
Yes.
7 years from the date. They have to be removed before that, by that 7-year mark.
Okay.
So 7 years. And unfortunately, late dates are harder to have removed from a credit report prior to that 7-year time frame than paying down credit cards. So that's why I say if you can just make sure that you pay things, within that 30-day time frame from the date it's due, then that would avoid, you being reported late to the bureaus.
Yes. So, student loans. Let's talk about student loans. Even though everybody is in hope that they are done away with, let's talk a little bit about these student loans, Lisa.
Okay. All right. Well, a lot of consumers do have student loans, unfortunately. When it comes to the loan piece of it, that's something that loan officer would need to talk about, like what payment they qualify them on and things like that. But when it comes to the credit piece of it, there are a lot of consumers or buyers that do have student loans that may still be in deferment.
Yes.
And we know what that means. It means that you're typically either still in school or, whatever it is, you don't necessarily have to make that payment right now. It's deferred. One of the biggest challenges that I see is our late dates on student loans that are in deferment. That sounds strange.
Yes.
But when a student loan is in deferment, your loan you have to sort of renew that deferment. So there's paperwork that has to be filled out and completed and whatever by you and by the loan servicer, but every 12 months. Now, the good thing about student loan companies, if it's a major, federal student loan company like Navient, Department of Ed, if you're in deferment, the moment that loan comes out of deferment, even if you're working on paperwork, you are required to make a payment.
Wow.
The challenge that I see is that consumers don't make those payments. The good thing about a student loan company, those major ones, is that they typically don't report you late to the bureaus until you're 90 days late in a lot of cases. That's the case. But a lot of cases, it's 90 days late. So that means that you would have had to make payments for basically 3 months, and you didn't do that, and then they reported you 90 days late.
Wow.
I've had consumers reach out to those student loan companies and try to ask for courtesy late date removals.
They wouldn't give it to them? Oh,
very
wow.
Very, very rare. So I can tell you right now, I don't have student loans, but if I did, I have a calendar or something that pops up on my phone. If that's what I look at every single day. 9 months after the start of my deferment date, 9 months, and I would start reaching out to the student loan company, trying to figure out what paperwork needs to be filled out. Get that done. Give yourself a couple months before all that gets done, and once know what your date of deferment is. So when it comes out of deferment, if the paperwork's not completed by you and the loan servicer, make your payment. Make your payment. Just make your payment.
College students, previous college students, deferred college students, do you guys hear that? Woo, deferment.
And here's the other thing, I do see student loans that have gone into collections, so they were supposed to be making the payments, and for whatever reason, they haven't been able to make those payments. So I do see them in collections. But here's the thing. You can't purchase a home for the most part if you have student loans that have gone into collections. My recommendation is reach out to that creditor, whoever the student loan company is, what it would take to rehabilitate or refinance those student loans. That's the terminology.
Rehabilitate, guys. Refinance.
Those student loans, because here's why. You want to rehabilitate or refinance into a brand new loan, because many of the times these student loan companies, the major ones, student loan companies, if you rehab those student loans, for a certain amount of good payments on the new loan, between about 12 months, you can actually reach out to the student loan company and request the derogatory student loans, the ones that went into collections that were rehabbed. You can actually request that those student loans be deleted.
Wow.
Because you've shown a good pay history for 10 months. Now, each student loan company is going to work a little differently. When you're talking about rehabilitating or refinancing, ask questions. I know that I was, I defaulted on these student loans. If I rehabilitate and make good payments for a period of time, how long before these derog student loans can be deleted? I see this often. I'm seeing credit scores, because I'm getting the word out there that they can be removed. I don't think a lot of consumers read their contract with student loan companies, but a lot of their contracts, it does say that if it's rehabbed or rehabilitated. So reach out, ask questions, see what the options are. Always ask, to see what can help you in those kind of situations.
Absolutely. That would definitely help. I had never, even heard of that. That you could literally that you could rehabilitate into a new loan, and then after 12 months of great payment history, you could, request for that information to be deleted. So I know that is so helpful for 75% of America who has student loan debt, just for the meantime, and not allowing that to be an obstacle to stop them from purchasing a home. So Lisa, that is like some great information.
Again, every situation's going to be a little different, but I'm telling you, I'm a yes person. I'm not a no person.
Yes.
So for me,
like, what can we do? Like, what can we do to make this happen?
Exactly right.
Yes.
Ask questions. Figure out how we can. The goal is always to remove as much of the delinquency, the derogatory as possible.
Yes.
So ask the questions. What would it take to get this done?
Absolutely, Lisa. Thank you so much for that. And now there were some rumblings about some changes to public records a few years ago. Can you give us the good news, the good, the bad, the ugly on that?
So I'm going to give you some good news.
Okay.
And I'm going to give you some maybe bad news.
Okay.
So back into 2017, there were some major changes to public records. And just to kind of short really what happened, the bureaus, Equifax, Change, and Experian, were the ones that made these significant changes.
Okay.
The first set of changes were to public records. Okay. So we all know public records are things like a bankruptcy public record, a tax lien. So if you have a tax lien, if the IRS or whatever filed a judgment on you, then that would show up on your credit report as a public record. Civil judgments. You live next door to your neighbor, your tree falls in their property, the neighbor sues you because they had to pay to clean up the, debris from the tree, and they expected you for it. So they filed a civil judgment in magistrate court on you. Things like that. Those are public records. In 2017, the bureaus made changes to, first and foremost, civil judgments. Probably 90 to 95% of civil judgments were removed from all credit reports.
Wow.
For all U.S. credit. Here's why. One of the changes they made was that, one of the things that we understood is that a public record can be reported to your credit report, but not even your social, a couple of pieces of information.
Right.
It would be your name and an address. If the social was not attached or included in that public record, those civil judgments were removed from the credit report. There has to be personal identifying information attached to the public record in order for it to remain on your credit report. So I believe up to 95% of judgments were removed. Now, bankruptcy, it had no impact on bankruptcy public records. Obviously, when you file a bankruptcy, there's a whole bunch of your burden of information, including your social. So there was no change to bankruptcy public records. There were changes to tax lien public records. They were all removed from credit reports, I believe, by the end of September of 2017. Every single tax lien was removed from public records.
Wow.
The bureaus removed them. They're blocked. They cannot be reported on credit reports as of right now. So what I came across were buyers that haven't been aware of this change, and it's significant in my opinion. So buyers would think they couldn't purchase a home or loan process because
right.
Exactly. Here's the thing: the tax lien has no impact on credit scores, FICO credit scores, or Vantage credit scores, consumer credit scores, because it doesn't show up on your credit report.
Right.
Your credit score is generated, it's generated by what it looks at and what it sees on your credit report being reported. So it doesn't impact credit scores. Now, here's the thing. So a lot of consumers, their credit scores increased and improved pretty significantly because they were removed.
Mm-hmm.
No idea. Isn't that amazing?
Yes.
But lien still exists. That's what I want everybody to understand.
Mm-hmm.
It exists. You know, when you apply for a mortgage, it's one of the questions that they ask you. They do run, you know, of course, they run different kind of you know, LexisNexis fraud reports that actually can show them or to allow the lender to see that you may have a lien.
Mm-hmm.
You may have to pay that lien or settle it.
Mm-hmm.
Again, it has no impact on your credit score, period. Okay?
Okay.
That's, I think, the good news.
That is.
The bad news is I've been reading articles, and again, this is just reading articles. I don't know if this is the case. We won't know until it happens. But I've been reading that those, if you still have a tax lien that's within statute of limitations, you know, it's the time frame that something can show up on your credit report, be reported to credit.
Mm-hmm.
If it still exists for you, it can be reported again. You know, they may start allowing tax liens to show up on credit reports again for 2020. Yes. So we're in a time crunch.
Yes.
And I say that because, again, it's just what I've read. It's, you know, it's up to the bureaus whether they're going to allow that to happen. And so we'll kind of have to see, you know, what happens from this point forward. But as of right now, tax liens do not work on credit reports and have no impact on any credit score out there.
Well, that's more of an incentive to go ahead before 2020 to complete your mortgage application if you've been on the fence. Like, don't play with it. Go ahead before new legislation is enacted and they put it back on the credit reports. I would say just go ahead and, you know, apply, you know, complete your loan application. And I think that's a good thing to do anyways, because even if you're not ready, like today, like I said, the lender can always work with you, Lisa, so that we can kind of put our heads together and come up with a plan so that that potential buyer can be successful. That's some awesome information. You know, things just change like every day and how they vote and all of that stuff. So thank you for that
tip. My job
tidbit.
to make sure that I pass along these changes and have an audience to do so that it's got the trickle down effect. This is what I'm hoping to. You know, this is what I'm hoping to do.
Yes. And
the other thing, I've got the other, I guess, good news.
Okay.
This is about medical collections.
Do tell.
Yep. So I believe in 2017 as well, there were significant changes to medical collections. And again, the bureaus have made the changes. So here's what, from what I understand. Of course, you know, I really study mortgage scores and things like that, but I read a lot on the changes of in the medical field. Right now, if you have a medical, let's just say you owe a doctor some money. That doctor, you know, you may have insurance, you may not have insurance. Let's say you receive a bill, let's say $100. If you do not pay that bill, most medical is charged off. You know, it can be 120 days, 150 days, typically 4 to 6 months later if you don't make the payment. So it depends on the medical place of how long, you know, before they charge it off. The bureaus, Equifax, Transient, and Experian, block any medical collection from being reported to your credit report until it's been charged off for a minimum of 6 months. Let me say that again.
Okay.
So first block a medical collection from being reported on your credit report until it's been charged off for a minimum of 6 months, which is significant because that's actually one of the things that I worried about. You know, even if I went at an annual checkup, there may be a small balance, you know, for whatever reason, and then you're not really paying attention. You assume insurance is taking care of everything, And then that could show up on your credit report, 4, 5, 6 months later, and you're like, wait.
Yes.
You have your flawless credit, and then you have this little small, $30 medical collection or $100 medical, whatever it is, and I panic over that. So I'm happy with the changes. I don't know if that is going to change. I've not read anything that will change. But what they're saying is it gives first of all, the insurance company time to pay, because we know that insurance companies don't necessarily receive something and pay it, immediately.
No, they don't.
No, they don't. So it gives the insurance company time to pay, adequate time to pay. It gives you adequate time to pay if you're aware of the debt. So that's what they're trying to, I think that's what they're trying to make sure happens before this debt shows up on your credit report.
Got it.
Yeah.
Got it. So our last dying question of this segment, I know we gotta run, but the last, one of the biggest questions, y'all got to hear this. So if a client has had a foreclosure in the past, if they have had a foreclosure in the past, can they still purchase a home? Please.
Oh my goodness.
Yes.
Absolutely. Well, I say absolutely.
Absolutely. Y'all heard that.
So here's the thing. I mean, and again, this is, is traumatic if you have a foreclosure. I completely understand that. People think that if they have a foreclosure, they can never purchase a home again or whatever it is, and that's not the case. Again, every loan program has its guidelines. So an FHA loan program had guidelines than a conventional loan program. So you can purchase a house again. Those time frames differ between the different loan programs. I can tell you, best recommendation is to have a loan officer take a look at it. They will tell you, once they see it on the credit report, they will tell you exactly when you can, or if you've been ready to purchase a home. Because of the age of the foreclosure. Foreclosure should not stop you from trying to move forward to open a home again.
Awesome. And I'm just typing in all caps, foreclosure should not stop you
Absolutely
from purchasing a home. And I want everybody to really listen to that, because of course everybody has challenges, and some things may have happened, but part of me bringing Lisa on here to talk about credit, and I have 3 screens up, Lisa, so if you see my head just swirling, that's why. But that's why I wanted to bring her on here, so that you could understand who she is, knows that she is experienced. She's been in this business for 20 years. She's probably seen so many loan applications. She knows them in her sleep. And then on the credit end, she can take a look at it and come up with a plan to assist you with getting, your credit home purchase ready. And she typically works through the lenders. And so one of the lenders that I work with very closely, she comes very highly recommended by them. And that's why I wanted to get this information and get these secrets to you guys, because it is about knowledge, and knowledge is power. And the more information that you have, the more prepared that you are. So what we call them in the real estate industry are limiting beliefs. And so my whole entire purpose today was to dispel some of those limited beliefs regarding foreclosure, repossession, student loans, public records, so that, you could be armed with the information that you need. Because if 2020 your goal is to become a homeowner, we definitely want to assist you with that. But you got to take the first step with us and listen to this information that we have given.
Yeah, and here's the other thing. Don't try to tackle it yourself.
No.
As a consumer, have experts. Have experts give you the right advice. Don't try
Absolutely.
Don't try to figure out what you should be doing, what you shouldn't be doing.
Get off of Google. Get off of Google and call the professionals.
You're not Google credit or anything, but
yes.
Really, just allow somebody that's got the experience and the knowledge and to take a look at it, and they will tell you exactly. A lot of buyers are shocked. Thought they couldn't purchase a home, or they needed 12 months, they just needed a plan, and all of a sudden they're pre-approved.
That's right.
They're pre-approved, and we just have to get that score up a little bit. There are a lot. See that happen a lot. I get emails forwarded to me from loan officers that say, I just cannot believe I was able to purchase a home. This just had no idea that they were in the position or close to it to be able to do that. So if it is your goal, your desire, something you want to do in 2020, don't wait. Just
do not wait. Give us a call. If you're looking at the Be Live, I had some people say we were kind of have some technical difficulties, but you should see my telephone number scrolling across the screen, as well as, my website. If you desire to purchase a home and you may, have some things, you may have some questions, feel free to call me. You can call or text me at 404-819-4495, 404-819-4495. You can also email me. You can email me at Trish, TRISH, at TrishSalesATL.com. And whatever questions that you may have, I definitely get them over to Lisa, so that, if you're ready to walk down that road and come up with a plan, that we can all work together. And so in a few months, or 6 months, 12 months, 3 months, however long it takes, that you'll have some keys in your hand. You can also, like I said, visit my website. It's www.trishsalesatl.com. Anything else that you would like to add, Lisa?
And no, I just want to, Trish, I want to thank you for allowing me to join you today. I'm quite honored. So I'm looking forward to hopefully, helping your clients achieve home ownership in 2020. I'm really excited about it.
Yes, ma'am. My goal is actually to help 50 individuals in real estate, and I'm hoping at least half of those are going to be buyers. So I definitely appreciate you taking the time out to come today and, just share your wealth of knowledge. I keep saying just the mere fact of getting the information that's needed, I hope propels someone to take the first step and go into the right direction. It was such a pleasure having you on. I enjoyed the class, and I'm ready for you to come back because I got the fundamentals. So if there's a part 2, I would love to get it. I still have my notes, and I do try to pass on that information as I speak with buyers, on a daily basis, to let them know that if you just have the inkling and the want to do it, and you have the will to do it, let us professionals assist you, so that you are placed in a better position to purchase your home. Home ownership is a goal. It's a big goal.
Right, and you have facts, not just assumptions. So assume I should be paying this. Don't assume. You have the facts once you have the professionals working on your credit, or your loan situation.
That's right. That's right. And every credit report is different.
Trish, I really appreciate you bringing me on here. It's been certainly a pleasure, and I've enjoyed it. So.
And I have enjoyed you. Yes, ma'am. And I look forward to seeing you soon.
Thank you. Me too.
You're welcome. You have a wonderful day.
Thank you. Happy holidays.
Same to you. Enjoy. I hope you get some time off too, just a little bit.
I'm going to. So thank you. I'll see you next year.
All right. And Happy New Year.
Happy holidays.
Thank you.
Thank you. Bye-bye.
Bye-bye. All right, everybody. Thank you so much to everybody that tuned in today. I had to bring you guys those secret tips and tricks to get your credit in order. If you have any questions, y'all, please feel free to comment on the video. You can also email me at trish@trishsalesatl.com. You can also go to my website, which is trishsalesatl.com. And on my website, it does have a contact page where if you have a question about the credit webinar, you can also put that in. I will be uploading this video, hopefully, to YouTube, so that people that are watching it for the first time, even though it is the replay, they will be able to be afforded with this knowledge that Lisa Meyers gave today. She's phenomenal, been in the credit game for over 20 years. And then you have a real estate veteran who has been in the industry for 11 years. And so I've seen a lot. I've seen a lot of circumstances. And I just want to encourage you that you don't have to let your circumstance stop you. Everybody has a circumstance. Everybody has a possible limiting belief, but if you count on your professionals to just assist you in taking that first step, I promise you guys that it will be worthwhile. And at the end of the day, you will get those keys in your hand if you just listen to us and allow us to assist you. It's been a pleasure being on my live again today, and I'm going to let you know we will be going back to our Wednesday real estate updates. We're actually going to start calling it high tea because Trish is going to be spilling the tea on what's going on in the real estate industry, the knowledge that I have, the classes that I take when I'm speaking to my lenders, the new programs that's coming out. Oh, we're going to have high tea every Wednesday at 1:30 p.m. So I want you guys to mark your calendars and get prepared for that as we move into the next year. I will also be having a home buyer seminar in January. So look out on my page for that as well. And make sure that you're sharing this information. You may already own a home. You may be a semi-subject matter expert. But guess what? Sharing is caring. If you know somebody who desires and who has the want to the want and the will to purchase a home, I want you guys to pass this information on. We want everybody to feel like they, are becoming a homeowner, that they have assets and all of that. So please help them be great just like you are great. It was a pleasure being here today. I have missed you guys. I have missed you tremendously. And I look forward to coming back so that we can get people in a home, so that we can help our sellers sell their home, and even our investors who are looking to invest in Atlanta. I just don't service Atlanta. It is Atlanta and surrounding. I'm from Atlanta, so I have a deep love in my heart for my city. And I appreciate you guys just coming on today. For those of you who refer me business, thank you so much for sharing my posts, for telling people about me, for sending them my phone number. I cannot thank you enough. I have had an awesome fourth quarter. I've had an awesome real estate year, and I just wanted to take the opportunity to thank you guys for that. I also have my real estate December 2019 real estate newsletter that will be coming out on tomorrow. So if you are not a part of the Trish Sales ATL Tea Party, yes, that's what we're calling it, the Tea Party. If you have not seen the newsletter, you will understand, because it is about a tea parlor themed. And so if you are not a part of the Trish Sales ATL Tea Party, shoot me a text 404-819-4495 to be added to the mailing list, or you can email me as well, trish@trishsalesatl.com, so that you don't miss the newsletter. It is always full of information. I believe in it. I believe in increasing your knowledge so that you can make better decisions when you are setting your real estate goals, so that I can assist you adequately as well. So I wanted to make sure that you had that information as well. You can call or text me. You can email me. You also have my website. So let me go on to my baby's Christmas party. She is expecting me. And if I do not get back on live, I just wanted to wish everyone a Merry, Merry, Merry Christmas and a Happy, Happy New Year. I believe I will be back on because I do want to talk to you guys about the upcoming home buyer seminar. I will have my lender there, I will have my inspector there, and I will have the closing attorney there. So everybody has confirmed, and we will be ready to serve you guys coming up in January 2020. Thanks so much for tuning in. I had one viewer today, and I'm giving away a gift card. So for my one viewer, you have my cell phone number. Send me your information. I want to put you a gift card in the mail. Thank you so much for being live on here and viewing this live. I think I said if you RSVP'd and you tuned in at the same time, you would be eligible to receive the gift card. So I do have one person, and I thank you so much for that. And I will actually announce who it was on the comments once I review the video. Everybody have a wonderful day. Happy holidays, Merry Christmas, Happy New Year. Be blessed.